Hello everyone, good morning and welcome to today's Morning Report Market Analysis videos with me, Richard Perry, Market Analyst at Handset Markets on Tuesday 25th of April. It's a fairly quiet open today, nothing too significant in terms of direction. There's still this mild sort of risk positive mood that's going through markets. Sort of just towards the beginning of the European session there was basically flat moves on the forex markets, but that's turned into a bit more of a risk positive move with the euro stronger, sterling stronger and the yen weaker. But equity markets are basically trading around the flat line, nothing too significant in terms of direction. In terms of the dollar, we're sort of basically flat on the day, as the euro has gained, but the yen is weaker. But also it's interesting that we're seeing some currencies weakness, which is sort of coming through as well today. There was an announcement yesterday that the US would be putting a 20% import duty on softwood lumber from Canada, and that's hit the Canadian loonie, for example. So that is sort of impacting, and sort of forex markets just generally, basically, still fairly risk positive though. In terms of where we're looking at on the French yields, well, they continue to fall, and certainly the spread continues to fall. And given that the German Bund yield rising also points towards that risk positive attitude, that is fairly in keeping with what we are seeing across markets today. Fixed volatility, for example, sharply lower yesterday and again lower today. So just generally speaking, equity markets are broadly flat, but currency is taking a bit of direction on the risk positive angle. Now, in terms of economic data today, we've got US consumer confidence and Richmond Fed composite index. Because there's not a great deal through the European session. We had the public sector borrowing for the UK, that was slightly higher than expected. That's not going to do amazing amounts for for sterling. You've got the consumer confidence for the States, 122.50 at 3 o'clock. You've also got new home sales, which is around about where we saw last month, 0.58 on million units there. Richmond Fed this afternoon could be interesting as well, because let me show you actually, first of all, consumer confidence chart. Consumer confidence really strong in the States at the moment, and that's at record highs, back to 2000 on consumer confidence, and the 122.50 would be again still strong levels. But the Richmond Fed could be interesting, because Richmond Fed index across these regional Fed surveys, they've been just falling away recently. That's the New York. Philly Fed fell last week, and Texas, which was the Dallas Fed, again slightly lower. Now Richmond Fed today. Now Richmond Fed has been strong in recent weeks, in recent months, and it'll be interesting to see if it starts to roll over. It's expected to come in at 18, so that would suggest again another regional Fed survey that's starting to roll over. So watch out for that. I think at 3 o'clock that could be an interesting one. Again, an indication that US data is starting to deteriorate. But yeah, that's this afternoon. So my chart today is Euro Aussie. Now we've had such an improvement in the euro outlook. It's sort of taken Euro Aussie above this resistance, this near-term resistance, which was around about 143 figure. Now you could even argue that's a big head and shoulders reversal pattern. I mean, I suppose you'd sort of measure that from sort of 36.20, so that's 680 ticks higher from 430. So it's not a million miles off 150 big figure. Yeah, that's sort of the inference from that reversal pattern. But look at this, 144 to 146. I'm going to zoom out here and show you the significance of that on a longer term basis. Look how many times 144 played the role of support through 2016, and then subsequently between that and 146 figure, which is also a basis of support, you've seen so many sort of reaction highs and reaction lows through these this sort of 200 pip band. So we need to break through that 146 level on a closing basis. If I zoom in here, you can see that it's sort of never really closed above 146 on that rally, even though on an intraday basis it sort of made it. So closing above 146 is key to the longer term outlook, and we are into this sort of resistance band now. So you've got this sort of minor resistance at 144.70, which is about to be tested, and then you're looking at the 146 area. So that is the key level to watch out for, I think, 146 on a closing basis. Now you've got the momentum indicators, which are increasingly positively configured. RSI towards 70, MACD lines rising above neutral. Stochastics also positive, so it is looking pretty strong still for further gains. Now that breakout above 143, that's becoming supportive. That was pretty much supportive yesterday, 143.13, and we've sort of got a high low, 143.45 as today's low. Now on the hourly chart, you can see that market is sort of pushed above an intraday resistance at 143.85 in the last couple of hours as the Aussie has weakened, and the euro has continued to strengthen. So it's all pretty much looking positive for further gains, and I think buying into weakness on the euro Aussie seems to be the way to play it now. Certainly big support, as I said, around 143 figure. So looking increasingly positive. A close above 144 figure would also be helpful as well. That would be back above that old floor. So watch out for that, because we didn't get that close above there yesterday. A close above there today would be a positive move, but as I said, 146 figure is a key level to watch. So I wish you good luck in your trading today on Euro Aussie and in the coming weeks, days and weeks, and I'll speak to you later. Thank you.